Another trading week is drawing to a close right behind me here at the New York Stock Exchange. Wall Street continues to see the combination of light losses and light gains throughout the trading session approaching this closing bell. But for the week, all three major U.S. indices on track for strong gains. Investors still unpacking this morning's cooler than expected inflation data, with core PCE slipping to a lower than expected 2.1% for April, as well as the U.S. trade deficit, which narrowed by a sharp 46% in April, while consumer sentiment rose to 52.2 from 50.8 in early May. And then, of course, we have trade tensions in focus after President Donald Trump said China violated its preliminary trade agreement. So there's a lot to look forward to in the week ahead. We have new data, we have a new month, and a renewed focus on trade tensions. Will we see a turbulent start to the trading week? Let's jump right into it and take a look at what will likely move the markets in the week ahead. Monday kicks off first in Switzerland with the Swiss first quarter GDP read due out, expectation 0.4%, while in the U.S., May ISM manufacturing PMI awaits expectations 48.7. Tuesday kicks off in Europe with the EU May preliminary consumer prices index on tap, a report that's penciled in at 2.5% year over year, while in the EU, unemployment scheduled for release, expectation 6.2%. Then in the U.S., April factory orders scheduled for release, expectations 3.1%. And then Wednesday kicks off down under in Australia with that nation's first quarter GDP read on the docket, expectation 0.4%, while in the U.S. we have May private payrolls due out, expectations 120,000, and then we also have ISM services PMI due out, and that's expected to come in at 52. But there's even more, this time north of the border in Canada. The Bank of Canada's interest rate decision that awaits, and that rate is expected to come in at 2.75% unchanged. Thursday sees even more rate decisions, this time out of the EU with the release of the ECB rate on tap. Expectations call for the rate to drop to 2% from 2.25%. And then on Friday, we stay in the European Union with the EU's first quarter GDP read due out, expectation 0.4% quarter over quarter, 1.2% year over year. And then here in the U.S., it's all about employment figures, non-farm payrolls, as well as the unemployment rate. May non-farm payrolls 130,000, that's expected, while the unemployment rate expected to remain at 4.2%. And don't forget to keep an eye on the combination of corporate reports, corporate earnings, geopolitics, trade tensions returning between the U.S. and China, as those have been major market movers as of late and continue to remain in the headlines. Keep an eye on those. And until next week, coming at you live from the New York Stock Exchange, I'm James, reporting for ICF.